for our example that combines week 7 and week 8, so we're combining our sales tax payable with our shipping items. Now with the FIFO LIFO average cost, what I'm going to be doing using the FIFO method for this go through, I'm going to be looking at EMI's PlayStation 4 store here, number 28, and putting together the last 2 weeks. So what I'm going to need to do this one is I'm going to need my journal paper, I'm going to need a T account sheet, and then finally I'm going to need an inventory worksheet to keep track of my cost of goods sold. Now, in my first inventory sheet for when I'm doing this via FIFO, I have already some beginning inventory. So I need to show that on my very upfront ending inventory. So as you can see here in the opening of my FIFO, for this example, I didn't have a purchase at this point. This was already stuff that I've already purchased a while back, so it was already recorded. So my opening inventory was 35 units with a cost of $12,250. Therefore, the average cost showing $350. And then, so I'm going to also have that in my T account. I'm going to have an opening inventory T account balance of $12,250, and then these other two balances to help offset that, a $10,000 cash, so I have money to pay any bills, and then an offset to capital for the $22,250. Now on October 1, we're going to buy more inventory to have in stock. So we purchase 20 additional items that cost $6,600 from the manufacturer, from Sony. But then there's also some $100 shipping costs. That's FOB shipping point. EMI also receives a purchase discount option on the base price of the items. Now, with this one, we have to think, does the shipping get included in our cost? And it does. The $6,600, because it's FOB shipping point, that means it's free on board to me, the buyer, all the way until it gets to the UPS guy or FedEx guy, whoever it is. So therefore, I do have to pay the cost of the shipping. So my inventory didn't really cost me $6,600. It cost me $6,700 in total before any chance of a discount. So that's what I want to show here on my first journal entry, that I got inventory valued at $6,700, and that I owe Sony $6,700 as of now before looking at possible discount. So now I need to update my inventory sheet with my most recent purchase. I need to show that I bought 20 items and that those items cost me $6,700, not $6,600. That's going to be key. I've got to put 67 here. Whatever my journal entry said, so I look back at my journal entry, and it shows $6,700. So whatever this journal entry shows, I've got to match that on my inventory sheet. So $6,700 costing me a total of $335 per unit. And remember, using FIFO, I want to keep each item separate, but keep them in their correct order of when purchased. So the 35 was first, and now we just added the 20 items in. Now I move down to the October 30th. EMI actually pays her bill. Now we got to be careful here because, yes, there was a discount offered, but EMI in this case was lazy or just didn't care about the discount. It wasn't enough to entice her. So she just paid within the 30 days of normal. She does not get that 2% discount that was originally offered if paid in 15 days. So the journal entry for this one's very simple. We just need to show that we reduced, what did we get? We reduced her liability to Sony by the full $6,700 because I paid cash. Now, since inventory was not in this transaction, I don't need to do anything to my inventory sheet. All I need to do is just simply update my T accounts. Now, I'm not doing T accounts because that will just get too many clicks around. So you need to have the T accounts off on a separate sheet here and update those as we go through. Pause this video to allow yourself to catch up. Now, maybe the most complicated one, just because there's a lot of information here, is the 31st when we begin to sell some items. And I'm going to actually have a separate sheet that I'm going to bring up. And we're going to keep track of this as we did last week, kind of off to the side, which should hopefully help when doing the journal entry. But let's kind of give an idea of what's going on. We're selling 42 items in total, and we sell them for $400 a piece. And then there's sales tax that needs to be added in. Of the 42, 37 are sold for cash. Amy bought the other 5 and will pay us later on account. When anything's bought on account, we offer a $310 net 30 discount on the base price. And then something new that we've never really talked about yet. Instead of giving my customers a 5% sales discount, I could do that. But I'm going to essentially do the same thing by offering to cover their sales tax, basically giving them free sales tax, which is a 5% discount in a sense. So it's the same thing as receiving a 5% discount. We're going to cover their sales tax for them. And then finally, Amy's units were shipped FOB destination, and FedEx billed us the $50 fee. So let's quickly think about the shipping. It's free on board to my buyer, and it's free to them all the way until it gets to the destination. So therefore, it is free to them. That $50 will be on me as the owner of the store. So now off to the side, what I want to do is show what's going on. I have a sale price. I have sales tax. Shipping we just determined was no. And a discount maybe. Actually, let's look at this as the cash option. So for my sale price, I have told us that the cost is $400, and we're selling 3,700 units. So in total sales, I'm bringing in $14,800 when I'm looking at just the cash purchases. For sales tax, I got to take this $14,800 and simply multiply it by the 5%. The shipping, nope, that's not on our customer doesn't have to pay any of that. And then a discount, yep, the customer did get a discount of 5%, which was the same as the sales tax. So I'm going to show that as a negative $740 here as a discount. So therefore, total cash collected will just be adding these up. So the sum, which equals just $14,800, makes it pretty easy. Now the AR option, these 4 things will be the same. I'll keep them here. Sale price, $400, and Amy bought 5 of them on account. I'm going to want to take the sale price times 0.05 to get my sales tax. Because even though I give them a discount, basically the same as the sales tax, I still owe the government sales tax. So that's why I have to show that. Shipping, nope. Amy had free shipping. Discount, we don't know yet. That'll come into play in a little bit. So we'll just have to leave that blank for now. So total AR, $2,100. It should be some. So that's going to be my, here I actually have 2 debits in this case. I have a debit for cash. What am I getting? Think about what's the business getting? I'm getting cash and I'm getting accounts receivable for $2,100. So that's my two debits. Now, I need to go ahead and look at what my credits are. Now, there will be a third debit, so skip a line when you're doing this. My credits, why did I get the money? Why did I get cash? Why did I get AR? Well, some of it was for the sale price, so that's sales revenue. And when I'm doing this, there's no need to have two sale revenues. I can just combine this and show $16,800 in sale revenue. And then I can combine what I owe the government. I owe the government $840 in sales revenue. So that'll take care of these two things, leaving the only thing left that I need to account for somewhere is the sales discount that I offered. I offered them an automatic upfront discount, and they took advantage of it by paying cash. So I'm going to record this discount just like I would if there was a regular sales discount. So here's my sales discount showing that I took a little bit off the bill. Actually, it wasn't $840. Do that there. It was, remember, it was $740. Now, and then I showed my two revenue accounts added up, my two sales tax added up. So total, I have total credits of $17,640, and when I add up my debits, it better be, I think I have my cash wrong too, which equals, bring it back to what it said here, there we go, 14.8. So add up my total debits, $17,640. Yep, $17,640. I do balance, so I'm on the right track. Now what I'm ready to do, before I look at the shipping, I want to do my normal Part 2 step. So I'm ready to look at Fifo, and I'm selling, remember I'm selling 42 items using Fifo. So first in, first out, I'm selling all of these, if I'm selling 42, all 35 items that cost $350. And then I'm also selling 7 of this second group that cost $335 a piece. So if you take 7 times $335, you end up with the $23.45. So in total, when I sell 42 items, my cost of goods sold is $14,595. And I'm going to put that into my journal entry just as soon as I update my ending inventory. Remember, I got rid of all of these. These guys are gone. You could mark them out on your paper. I sold 7 of these, so that leaves me with 13 left at $335 a piece for a total cost of my ending inventory of $43.55. Now let's go back and update our journal to show that I did have cost of goods sold of $14,595. So there's my Part 2 of the journal entry. And now I need to go back and actually remember that there was a shipping fee. The shipping is on me, and then I need to think, is it an expense? So I asked the two questions about expenses. Is the company receiving a benefit? Yes, they are. And are we only receiving the benefit for right now? Yes, so that is an expense. And it's an expense that I'm going to need to pay as soon as the FedEx bill comes due of $50. So this one was a much more complicated one just because we had a sale going on and so we always had 2 journal entries at least, and then we had a third entry to show that we actually incurred that shipping expense. Now, on our next entry, as of November the 5th, a customer who paid us back on October 31, who paid cash, so one of those 37 items, 2 of them are returned. And it tells me that those returns were items that I had bought on October 1. Those are the ones that those are the ones that were returned to me. That's going to help me know how much to bring them back onto my books for, to remove the cost of goods sold. Because remember, with a sales return, it looks just like a sale entry, just flipped. So let's go to my little worksheet here. And I'm going to do this one off to the side and kind of do it separate of this one. It's just backwards. So I'm going to have a sales return now. A sales return, remember we had 2 items, and those 2 items I sold for $400 a piece. I need to give back sales tax of 5%. Shipping, I don't need to do anything with that because there wasn't anything for that in the first place. Now, just like how I was doing before, I also, since I gave them an upfront discount, I need to take away a little bit of that discount. I don't want to give them back all $840 because I actually gave them a discount based on this sale price. I gave them a 5% discount on the $800. And so what I want to do, and the 5% happened to be the sales tax. So I want to take that back out, and I don't give them a refund on the sales tax. So total cash refunded is actually the $800. And so we're ready to do that journal entry for the first part. So I'm undoing my revenue by creating this contra account, sales return, taking back a little bit of the sales tax that I owe the government because now I don't owe them because like the sale never occurred. This I hadn't updated yet. This should be $40. And then this should be $800 based on, again, just what I showed in my worksheet here. I had $800 in return, sales tax going back. Now originally I had a debit as the discount, so when I'm taking it away I need to go ahead and credit it, pretend like that discount never happened, and then give them back what I said I should give them back is $800. Now when I have to give back inventory, or when I'm getting back inventory, that's going to affect my cost of goods sold because it's like that sale never happened. So I'm going to actually need to update my inventory worksheet, and I'm going to need to update it in this area here. Because now that I have 2 coming back, I no longer have just 13 in my ending inventory. I actually have 15. So this is always kind of an updated summary. But to get anything to flow to my summary side over here, something has to happen in one of these 2 columns. Well, when I'm having a return of a sale, that's going to be just the opposite of what I did when I had a sale. So now instead of selling these items, I'm having a return. So I'm putting this as a negative. So I'm putting this as a negative 2 items. There we go. I tell us that the items were from the October 1st items, so those were $335 a piece. I'm getting those back. So, and that's what I have on my books right now. It works out well like that. So I have 2 items at $335. And so now I have 15 items that each cost $335 in my ending inventory. So I need to update my journal entry to show that $670 coming back and as a negative to my cost of goods sold, which is exactly what I'm showing here. A negative to my cost of goods sold. Now I find out that sure enough, one of the 2 items that was returned actually was defected. So I need to return that back to the manufacturer. Now, the manufacturer isn't going to reimburse me for that original shipping. Remember back up here, I had to pay $100 in shipping to get those items to my store? Well, just because I have a return, the manufacturer isn't going to be reimbursing me for that. But, as most companies will, they may send you a return paid, but essentially as being paid shipping label, so you don't have to pay it again for any returns. But with that said, they're not reimbursing you for that original shipping. So when Amy returns something that she bought from Sony for $6,600, they're going to give her back what was originally paid. So off to the side, and I want to do this, how much, if they were $6,600 for the total, not $6,700 because that included shipping, but just what Sony billed me, for those 20 items, I'm only going to be getting back $330 from Sony. However, the inventory cost me $335 because there's that little bit of shipping that's tacked on. So let's look at how the inventory sheet's going to first look. So when I return an item, I'm going to again put this as a negative. This is just the opposite of me purchasing. So instead of me purchasing 20, it's really like I purchased 19 when it was all said and done. And $335 comes back off. So instead of having 15 items in my inventory, I really only have 14. 14 at $335 a piece. So I'm taking off $335 of inventory as my credit. My debit is going to be cash of $330 because that's what the Sony's going to pay me back because they don't pay me back that shipping piece. So now I have $5 extra that I've got to decide what I'm going to do with. Well, that original shipping cost was hidden in this inventory. So when I have the inventory and then eventually when I typically would sell it, it gets expensed out as cost of goods sold. You just don't see it. But now that I don't have that inventory anymore, that inventory has now become exposed. It's no longer hidden. The customer, my original buyer, the seller that I bought it from isn't going to give it back to me. They're just giving me $330. So now I'm still left with $5 hanging out there that has since become exposed because it no longer has inventory to hide behind. If it's out there and I can't do anything about it now, I do have to actually call it a shipping expense. Okay. Now, we're almost through. We've got 3 left. Amy pays her balance due. So if I look back to my T account, Amy owes, and I'm going to bring up my little sheet. Here's my little my walkthrough example. Now remember we had 2 steps that I like to do when there's a discount option. Now I look back to see if did she actually qualify for the discount. So she pays it on the 7th. She bought it on the 31st. And we offered a 310 net 30 discount. So if paid in 10 days, and she did, she gets a 3% discount. Okay, and remember it's on the base price. Her base price, even though she owes $2,100, her base price was only $2,000. So step 1 is to determine the discount, and we're simply going to take the $2,000 times 3%. Step 1 is discount offered of $60. Step 2 is to then show, okay, what's my AR balance? Well, that was $2,100. And then the discount received, that's what we just figured up above, $60. And then total everything, and we get what we actually received in cash. Cash received, $2,040. This will be my journal entry. I'm receiving money, not as much as I typically would because I did give a discount, and I need to remove Amy's entire AR balance. So we can do that with our journal entry now. I brought in cash. Not all the cash because I did offer a sales discount. Remember, that's a contra revenue account. And I need to credit Amy's account receivables for $2,100 to show that she owes nothing. Now, none of these transactions involved inventory, so I don't need to do anything to my inventory sheet. Just simply update my T accounts. Now, the final two. EMI purchases on account 30 more inventory items for $94.50. There is shipping costs that usually go along with it. However, those shipping costs are labeled FOB destination. So remember, that's free on board to me, the buyer, all the way until it gets to my house or the destination. So therefore, those $150 cost isn't my problem. Sony's going to be paying that, and they're going to be responsible for it for their own expense. That doesn't involve me at all. The only cost that I'm worried about is the actual sale price that Sony offered of $94.50. So that's going to be my journal. Pretty easy on this one. I need to show that I'm bringing in inventory of $94.50 and that I owe Sony the $94.50. Now, inventory was as part of my journal entry, so I need to update my inventory sheet. I need to show that I bought the 30 items as a purchase for $94.50. And when I do the division, that shows me that each item costs $315 piece. So what I'm doing is just tacking it right on, right underneath my original opening balance here at 14, what I started with before my December 1st purchase. So now I have the 14 items plus an additional 30. The 30 are at a little cheaper rate. Now to finish it off, we sell 36 PlayStations, 390 each, so we're starting to give a little bit of that. I received them a little cheaper, so now the store can sell them for a little cheaper. Again, there's sales tax, but we again are very nice, and we offer an incentive for those cash customers. All of them happen to be cash this time, so I give a discount to all of them, basically covering the sales tax. However, 30 of the items did need to be shipped. Shipping point is it's FOB shipping point. So that's free on board to the buyer all the way until it gets to UPS, but then they do have to pay the shipping. So the buyer is responsible for this $300. So let's look at, we can do my little steps here, just like what I've done before. And the difference will be, this is the cash option. That's the only option there is on this one. Cash option, we sold for $390, we sold, I gotta go back and check, 36 items. So a total sales of $1,440. You'll see it updated my sales tax for me. $702. Shipping, there was shipping on this one that the customer needs to pay, and they did pay up front. $300. And then the discount, remember we give them 5%, which happened to be the exact same as the sales tax. So essentially I'm giving them the $702 back. So therefore, total cash received is $14,340. Let's do our journal entry number 1 with this new information. And again, I'm going to need to update because I did not originally include this in my opening enters. That discount option. So we had a sales discount. We had cash coming in from what I just figured, $14,340. I offered a sales discount of $702. I had sales revenue, $1440. Yep. I need to show that I owe the government $702 in sales tax. And I need to show that I am going to need to owe FedEx money up front. So when you add up my 2 debits, I get $15,042. And when I add up my 3 credits, I get $15,042, so I do balance. The last thing I need to do is now update my inventory sheet to show that I lost some inventory and to then know how much cost of goods sold am I going to need to account for. So I sold 36 items, and I'm using Fifo. So I'm selling 36 first out of the top, the 14. And then the remaining items that are left, which would be 22, are coming out of the 315 group. So let's look at that. 14 items at $335, so all of the cost gets carried over here, $46.90. 22 items at $315 a piece. Do the multiplication. I have a total cost of goods sold of $11,620, leaving me with ending inventory because I sold 22 of these. So if I sold 22, I'm down to 8 at $315 a piece. That gives me a total of $25.20. Let's look at the final journal entry to show my cost of goods sold at $11,620. Now, for additional practice, what I want you to do is to go through, and I'll send out the answers to whenever you like. Just let me know, and I will send you the answers looking at it, the same problem. How is it different using LIFO, and how is it different using average cost? So that would be good practice to try this and to practice with LIFO and average cost just to make sure you have it down. So this is a good summary of everything we've done the last 2 weeks. And it mirrors pretty close the homework that I have for us this week, the graded homework. With that, we will close this off, and my next video will look at week 8, 2 Wiley Plus problems.